Welcome. It's the Trading Pit, your market update for sophisticated crypto traders. It's February 6th, and here in the studio is JJ Ben Lilly of JLabs, and I'm, of course, Marconi White. We're going to jump right into it. Today's top story, Genesis seeks approval to sell $1.6 billion in Bitcoin Ether Trust holdings. And from the article, nearly $1.4 billion of Genesis assets were held in Grayscale Bitcoin Trust, GBTC. Ben, I want to ask you, Grayscale's lost over $6 billion since the trust became an ETF. When do the redemptions actually slow down?
That's a great question. I don't have the best answer for you, but I would have to imagine it's going to take a little bit of time, maybe some board votes to understand what those assets, where they're going to go, how they're going to be loaded, who they're going to work with to go ahead and execute any of those sell orders. So when does it stop? It's going to be some time. It's definitely going to be some time. I think we're going to have this story hanging over our heads until price starts to go up and kind of cures all ailments in the market. So have this be until April, May is what I'm thinking.
April, May. All right. That's a lot of sell pressure. JJ, I want you to answer kind of the same question. You know, Bitcoin's trading low 40K. We look at some of this sell pressure. Is this enough to actually give us the momentum to move out of that range?
It's hard to say. I think this was kind of what we knew all along, right? Is that Grayscale would become unlocked and that would unleash supply into the market because you had people that were holding it throughout the past bear market when Grayscale was trading, 50% below NAV. And now they got a get out of jail free card, essentially. They got bailed out in the form of this ETF, and we see that spot distributing to institutions now. So Grayscale's trust has been dropping rapidly, and we see the asset under management from BlackRock, et cetera. Those numbers are growing. So it's just going to take time for the market to digest it. It looks like the market's primed to absorb that supply. At least it has been thus far in the year. The fact that we're still trading above, 42,900 currently, given this influx of supply, it seems like the market was prepared for that and eager to buy it at these prices. So we'll just have to wait to see how it plays out. I don't think it's necessarily going to send price spiraling downwards. We've seen a lot of sell pressure come in so far, and that hasn't really broken the momentum to the upside that we gained throughout Q4 2023. So I think it's just another thing that is going to continue to pin us in range for the foreseeable future.
Okay, so not a huge amount of sell pressure necessarily going to do it. Anything right now really give us out of that momentum. Let's move over to the markets and kind of see what everything's looking like from a pre-market action. Bitcoin's currently sitting at about 42,727, up about 1.2% on 24 hours. Ethereum at 2,297, up about 1%. We're still sitting about flat. JJ, we've been talking about this now for weeks, looking for some kind of catalyst. Do you see anything in the spot volumes that may suggest that catalyst could be happening this week?
No catalyst for this week. That said, chart looks decently bullish here. It's kind of regained some momentum, especially if it can accept back above the 50-day moving average here, which is right around 42,300. Acceptance above there could bring us to 46K or so, but as we just talked about, there's still a lot of overhanging supply in the market. And until that's all digested, I think we're just going to be in this, boring range where it's like watching paint dry each day. We're just moving back and forth a few $100s and not a whole lot's happening.
It does feel like we're stuck on Groundhog Day. We've talked about this several times about these buy and sell walls coming in here and more market makers just engineering liquidity. Is there anything there from the tail of the tape that may suggest what we could see this week?
No, we still see the large sell orders resting right above the current range. So anywhere above 44,000, there's just huge blocks of sell orders here. So until these are removed, it's going to be very difficult for price to gain acceptance above there. As we talked about, there's just so much supply entering the market now and just not enough buyers to overwhelm it. It seems like it's more of a passive bid that's happening. If we look at the whale wallets that we track, so these are wallets holding greater than 10,000 Bitcoin. We see on net since January 18th, they've been in accumulation. So basically every day since January 18th, these wallets have added to their supply, which is obviously long-term bullish, but that's nothing that gives us a signal that says, hey, Bitcoin's going to jump up 10, 20% this week.
Okay. Well, I think that that's the tail of the tape from a spot perspective. Let's go over and look at some of the other markets that could have an impact. We oftentimes are looking at the spot or the perpetual markets to see if they're going to be a catalyst, at least within range. Looking at the volumes today, we have about 11.1 billion in open interest. That's down about 1.7% on 24 hours. If I look at long or shorts ratio, there's sitting at about 60% long. JJ, again, if we're looking for some opportunities for traders, is this giving us any indication where we may be going in the next 24 hours?
I think it looks like a cash and carry trade being carried out. So people are basically long spot, as we point out with those whale wallets. And then they're going to short the futures in one way or the other and collect some of this annualized basis that you see here in this column. So this is basically how much yield you would get over the course of a year if you were shorting these perpetuals and just collecting the funding. So irregardless of price movements, this way you're exposed to spot. So if price moves up, you gain that upside and it offsets your losses on these perp contracts. And then if price goes nowhere, you're just collecting that funding and basically have a free yield trade. So that seems to be the most popular trade of the moment. We see that also in options, as we've been discussing, like implied volatility levels have just fallen and can't get up. And it's you see this, right? There's just an overwhelm of volatility supply into the market, which is just signifying that people are holding spot and selling puts and calls and just grabbing that extra yield while Bitcoin digests all of the supply that's coming in from the grayscale unlocks.
Mm.
So
I do
boring.
it's very, very boring. More lack of interest. We've talked about that a couple times. In fact, a couple episodes when we were talking about the trade of the year, the volatility spike that we expect to still come, but it doesn't sound like there's anything that's going to push it there this week, at least from a perpetuals perspective.
Yeah, it would take like basically if they hit that $1.3 billion sell order at the market, that would kind of cause the volatility we're looking for. But ultimately, these people have sophisticated execution systems, and they're not just going to sell it all in one shot. It's going to be a very gradual, slow swap out that doesn't really move the market too much in any one direction over the course of a single day or two.
Yeah, I wanted to mention that I think the headline would imagine people are just going to, they may see this market dump, but I imagine, if they're looking to actually recover some gains from this position, they're looking to sell without having a market disruption.
Yep, exactly that. So they take their time with it. There's no rush out. Obviously, these people were patient, right? They were holding Grayscale when it was trading at $7 last year. So there's no rush for them to get out, and they're happy to do so at any price. I'm sure over 30 is good for them. So
over 30, yeah.
They can take their time with it.
Yeah, no, absolutely. Ben, your perspective on sort of this, if we just look at the spot and the perpetuals futures price action, anything here that's, I guess, going against your playbook of what you're expecting for some kind of wick down in the coming weeks, coming months?
Probably just the speed at which it's happening. I think just the end of last week, I was discussing how price action doesn't look right for any upside movements over the weekend. And if anything, we're just kind of seeing more headwinds start to emerge. And it just feels like it's moving at a snail's pace. And we look at these market theses and think it's going to be happening next week or the week after, but it just feels like everything is in slow motion right now. Like coming in on yesterday, logging in and looking at everything, it felt like only one day went by in terms of price action and the changing of the order books and really all those technicals. That's what it felt like. Like right now I have the bid-ask ratio kind of adding a little bit of color to what JJ was mentioning earlier. You saw those whale walls starting to accumulate. How are they accumulating? They're not really doing it by hitting the buy button. They're kind of just sitting there and waiting for price to kind of reach their range. So on this chart, this is the bid to ask ratio. So it's really just comparing the amount of bids on the book to the amount of asks on the book within a specific range of the current price. And early on, before price really start to rip, these blue bars right here indicated there was a lot more bids on the book. And then just as price started to rip higher, kind of enter in this new range, we started to see a lot of red bars emerge. But then as price starts to dip in, you see it's hitting some of those bids that are already on the book. And now we're kind of above price. I'm sure bids have moved a little bit. I was going to pull up the trade book this morning, or excuse me, the order book this morning to kind of showcase that. And didn't manage to do it beforehand, but this really paints the picture that we're trying to articulate here, which is the price is going to be moving slowly. It is a bit of a headwind right now. Nobody's going in there trying to front run anything at the moment. So
It's a little bit of a turtle and a hare kind of story.
Yeah. There's
Everyone
an
wants to
absence
be
of
moving
catalyst
quick.
right now. Like the market needs a reason to jump higher or lower, and there just hasn't been that. So it's just kind of created this slow, monotonous pace after like the wild run up we saw in December through January. So it's just kind of
and it's a
digesting.
coiling too. Right?
Mhm.
It's like the more time that passes here without kind of what JJ mentioned of a narrative with any sort of catalyst, anything that the market would want to front run. We don't really have that right now, but while we're starting to wait for that, like right here, we have implied volatility. We've been stressing this for, I feels like months at this point, that volatility just keeps getting suppressed over time. And this blue line up here, this is January 23rd, and this is the implied volatility as of this morning. And it just continues to come down. And that's just acting like this coiled spring right now. So if we do get I wouldn't call it just continued sell pressure, but a big movement in terms of the downside, runs into some order books on the bid side. That's going to be what we really want to see. And hopefully that starts to lift this curve up and we can really get on with it when in terms of the market going upwards.
Yeah, that's a good point. When the market's ready to move, we'll see it in the implied volatility levels moving. So if we just overlay BTC price on top of this implied volatility chart, you see that implied volatility start to spike up before Bitcoin actually made the move in October. And this is just kind of a historic pattern where implied volatility will start to rise. Those people get into position, then the move happens. So really, until you start to see that breakout or at least find a bottom here from this sad pit it's in, there's really no reason to be betting directionally for now. Like you look at this, we've basically been in a range since December. There was a couple outlier moments here, but for the most part, it's just been about a 6 to 8 week consolidation here.
How long do you think that consolidation can hold on?
What was that?
How long do you think this consolidation can last without this some kind of catalyst to push it either up or down?
It's hard to say. We're adjusting to new market makers now. That's the biggest thing. So they seem content to just execute this cash and carry trade and milk it for all it's worth, and then we'll see it move out of range one way or the other. But I would say I would assume this range breaks one way or the other before the end of February. Not betting strongly on that, but that's kind of my gut feel on it. If I had to spit out a decision there, I think we would see some kind of volatility before the end of the month.
Ben, I want to come back to your point about looking for we don't really have an impulse right now. We talked at the beginning of the show about Genesis selling off and adding a lot of supply into the market. Obviously, there's rumblings at time about other exchanges, the other exchanges that may be unloading government action to sell. What exactly, if you're looking at an impulse from a crypto perspective, is there anything that's kind of on your radar that you're looking at that actually could be that impulse to actually drive that?
May I ask? Good question. I have a specific event. I'll be frank with you. I'm just kind of up the news to wait for something. I know there's a lot of discussions taking place on the macro level, but is that going to go ahead and translate to price action on Bitcoin's chart? I think it will at some point. But is that really what the market's waiting for? I'm hesitant to say that's the case. So right now, just looking at that chart, in those, like right now on Bitcoin, we had that liquidity sweep higher. We had the liquidity sweep lower. We're continuing to sit in range, letting liquidity build up. And so right now, it just feels like it's all about engineering that liquidity to go ahead and accumulate, as JJ's chart from earlier is showing that's taken place. And this is how it happens. It's very slow. It's a slow shakeout, if you want to kind of give it that term, right? Slowly shaking out the market, accumulating over time. And then later on, you'll see that positioning show up. Likely, you'll see implied volatility start to spike. That's the shift that we're kind of waiting for. And whatever narrative shows up on that day, that's going to be the narrative we run with for the next month or two.
That's exactly the way it works.
Waiting and receiving. Okay. JJ, I want to go back and just take a last look at from a crypto perspective. We talk about a lot of different volumes. We've already covered the spot being in this range, perpetuals the same. If we look at options, looking at Deribit, options 24 24-hour volume is sitting just at 726 million. Highest volume looks like some calls going into the 23rd, 28th, 29th, 23rd of February, 28th of June, and 29th of March. What's your take here on the options markets? You talked before about carry trade. Are these signaling any kind of movement, any kind of catalyst that's maybe sitting under the water?
It's hard to say. Like those volumes could be mostly selling. Like we were talking about, people are just selling volatility on both sides. It could also be people willing to take a small bet due to how cheap those premiums are at the time. That, hey, maybe we get some volatility one way or the other before the end of the month. They're just trying to basically buy a lottery ticket on that due to how cheap the implied volatility levels are. But there's been no meaningful activity in the options market, or else we would see it here, right? Like if all of a sudden out of the money calls started getting bid relentlessly, we would see these implied volatility levels shoot up, or same way with puts. So there's really been no decision there. That might be possibly a turning of the tide, but it's hard to say right now. Like there's nothing that jumps out that says, hey, we're about to make a move higher one way or the other in terms of options right now. It just seems like kind of a steady flow of volatility supply coming onto the market still.
Well, I want to unpack that a little bit later in the show. Just talking about going back to that carry trade, and you mentioning that market makers are starting to change. We've got new market makers in the market, and we've got obviously new ways in which they can use these financial products to express a trade, and this could be changing the actual pacing of the market. Could be changing where the smart money's going. Is that a good take?
Yeah, it's just how they're extracting profit from the market, right? So sometimes you're going to take out your profits directionally by having kind of exposure one way or the other, net long or net short. In this instance, they're just happy to accumulate supply and then sell derivatives against it and collect that yield. So whether you're shorting perps and collecting the basis on that, or if you're shorting options, whether it's puts or calls, and then they expire worthless, you collect that premium. That's just the way that they're modeling their trades right now. It seems to be the kind of narrative of the moment, is that Bitcoin isn't going anywhere. So you kind of have this free money sitting around if you can adequately hedge yourself and sell these derivative products.
Yeah, if you got access, you got keys to the kingdom.
Yeah,
it's a good way to play it. Okay, so I think that takes us through the crypto markets. I want to go next to the DXY, but before I do, for those who have joined, welcome. Hit the like button, hit the subscribe button, hit the notification bell so you're always aware when the show comes out. And for those who are looking for even stronger ways to support us, there is always the option to use our coin call link to start trading options and perps, perpetuals. As we've talked about many times on this show, coin call is a great exchange, a nice, beautiful, elegant interface and competitive fees. Go check it out. And if you got questions about trading options, I think there's a guy on this channel. His name's JJ, who's putting together some of the best options videos in the market. JJ, before we talk DXY, you have another video coming out, don't you?
yes, sir. This week. So stay tuned, subscribe. There'll be some good alpha in there, just in terms of long-term outlook on everything we're discussing, from volatility to Bitcoin and how you can structure your trades with it throughout the course of this year, especially after the halving, or as we approach the halving. So be a good discussion. Look forward to sharing it with you guys.
Yeah, this is unmissable in my opinion. If you're looking at some of these fat swings, you got to start studying these now, opening those accounts, doing some paper trades, doing some small trades so you can get comfortable, because when that happens, you're going to have to be able to execute. Okay, let's move on to the DXY. I got the chart pulled up here. It's now sitting at 104.49. JJ, we talked about 104 being the Rubicon. If this got crossed, it was going to be risk off. Tell me, what are you looking for now that we've hit that point? And what is this going to mean for risk assets like Bitcoin, Ethereum, and the rest of the crypto market?
It's looking scary, isn't it?
Yes, it is.
Like we were talking, like, I think we mentioned this in December. I called this like the slingshot effect. Like it goes down so much and then it just rips, and there's no stopping it once it gets out of control. And although like Bitcoin and traditional like TradFi stocks and whatnot are still doing well, we've seen these issues, like the issues that a strong DXY cause, are popping up. So we saw a bank failure last week in the US. I think China has over $1 trillion of stock value wiped out. And that's all a byfactor of what happens when the dollar is too strong. So when it's at these levels, like I would expect Bitcoin to be a lot lower now. The fact that it isn't, that there's kind of mixed signals there, right? And I'm not sure what this is. Maybe it's the market attempting to front run an eventual weakening of the dollar. I've heard rumors that China is going to be printing, some untold trillions to bail out the market. Any of that liquidity would obviously support risk if it's added to the market. But right now, there isn't that liquidity. And it seems like the market's attempting to front run it. How that will play out, who knows? But I think we're starting to see the stress that a strong Dixie can cause in markets. It hasn't hit our market yet, but that doesn't mean it won't if this continues higher. And it looks like it's going to right now. So that's definitely a major catalyst to be aware of in the back of your mind. Like, as long as Bitcoin's trending above 43,000, you're in the safe. But if you start to see Dixie continue higher, Bitcoin fall below 42,000, I think that it's telling you everything you need to know. There's a whole lot of risk when Dixie starts moving like this, as we've seen in recent weeks.
How far can this run in your mind? Are we up to 107? I'm looking at the chart here. It looks like the relative local high would be about 107. That seems a long ways away for the Dixie, but is that possible, and in what time frame?
I mean, who knows? When Dixie starts running, like it becomes very unpredictable. As we discussed, there's way more debt in the world than there are dollars. So there's just a natural supply and demand imbalance when it starts to run too hot. So this could go to untold levels, and you're better off just waiting for it to tell you that it's topped rather than trying to figure out what level it will necessarily top at. As we discussed before, Dixie kind of gives you a lag, right? So when it moves down, eventually there will still be a window of opportunity to enter Bitcoin. It's not like, I've never seen it happen where Dixie tops and then that same day Bitcoin just runs up. Usually there's like a 2 to 3 week window there where after Dixie cools down, you can still get great entry points on Bitcoin and ride it up from there with a lot less overhead risk of a strong Dixie.
Ben, I want to bring you up here and ask about yields on bonds. We're looking at those as a way to gauge if the system's starting to crack. You've talked about that a couple times. We're looking at the 20 and the 30, and what the data I'm looking at seems like they're down on the day, maybe flat. Are you looking for those to kind of ride lockstep with Dixie, or would you expect those have a little bit of a lag but start to spike when we start to see the cracks in the system?
They're moving in tandem, it feels like. Like right now, I got the Dixie chart, the US dollar index, up on my screen, along with the 30-year yields. And you can kind of see they're just moving in lockstep. I think when I published Espresso last week, I said over the weekend, you can see DXY make its move higher, as well as the 30-year yields start to rise as well. How far up was really the question mark I had on my mind. Are we going to get above 4.5% on the 30-year? We'll see. This week we have the 30-year auction coming up. I had the date pulled up. I think it's in 2 days. On the 8th, we're going to have the auction for those new issued 30-year term treasuries coming out. So seeing what the market does in response to the new issuance, we're going to see that show up on the chart. And that's going to be probably the most important event to watch on a macro side of things this week. And that's the question, how high will we go? DXY is going to follow it looks like. On our model for our DXY risk metric, that actually changed this week. It actually started to show that we're kind of entering risk off environment just as of the 2nd, it looks like right there. So that's never a good sign. That's just additional headwinds for Bitcoin to try to make new highs here. So it just feels like on a macro side, those headwinds are not letting up anytime soon.
Okay, no headwinds. We get no relief. Etham. Oh, let me see if I can pull it up. We got a comment here from Etham. Thanks for joining, Etham. Maybe 10-year auction on Wednesday, which I think, Ben, you just commented on. And jobless claims on Thursday can give an idea for Fed action. But other than that, there's none on macro. We've just continued to see strong data in the U.S. market. I'm seeing the top headlines and the conversations that are happening on other financial channels. It seems like it'd be very difficult in the near term for the Fed to be able to cut rates given the strength of the economy.
Well, that's a good point that was just brought up. You have the 10-year coming out on Wednesday, and then you have the 30-year coming out on Thursday. And so there was, in my last piece, share this tab. There we go. I pulled up a table. Let's see if I can zoom in a little bit. Actually, I think I can click on it, make it bigger. Hopefully that shows a little bit larger for the audience. Yeah. But those red boxes are upticks in issuance. And so they're both happening on Wednesday and Thursday, right? So we're having looks like a 5 billion increase, and you can see, relative to the previous months, that's sizable here. Same with the 30-year. So how is the market going to respond to that this week? That should be on everybody's radar. If you see rates making moves, if you see the dollar making moves, if you see Yellen making comments, or Jerome, or any of the other governors, this is why, right? This is the market starting to buck a little bit, trying to show like, hey, we're having a little bit of stress. Okay, I think that might have been too far. And if that's the case, we'll probably see, some comments come in through, as well as Nick. Nick, what's the last name? Such with a T.
Tiramisu.
Nick Tiramisu.
Nick Tiramisu.
Let's not do that to a great dessert. I don't want to. I don't want to ruin that for a lot of people's great childhood eating good food. JJ, what are you looking for? What are you expecting in the Dixie? I mean, you talked a little bit about sort of it being able to run. I know you're oftentimes looking at the RSI. It looks like it jumped off of the RSI, bounced back from it. Is there anything else you can tell us that you're looking at to give us signs if we're starting to see it starting to soften? Maybe give us a little bit of room?
That was really a huge confirmation of this uptrend, is that we had this massive down move on Thursday after the FOMC. It dropped. It looked like it might be ready to, the uptrend was over. It had this long consolidation, dropped down, but it basically retested the 50 RSI mark here on the daily chart. And then that just sent it like a springboard, shooting back up above all resistance levels here. And if we zoom out to the weekly chart, we see that it's now over this 50 RSI mark that had been serving as resistance. Past times we've seen it jump over that 50 RSI mark, it's made even larger moves. So the last time was in August. We saw that run all the way up to 107. Prior to that was way back in 2021, and we see how that ended, right? So this is kind of a long-term trend confirmation, especially if it continues through the end of the month. We could see Dixie move up back towards, the 2022 highs for all we know. It's definitely in an uptrend now. What it would take for it to reverse, who knows? That could be some sort of emergency liquidity program, bond market crisis, bank crisis. It seems like the market's trying to front run that now, right? And I don't know how that ends.
Mm-hmm.
Because it seems
that's
like
a great point. Trying to front run, because it's not a question of like, oh, we're just cut like 25 or 50 basis points, which is, I would say, one side of the table, higher for longer, and then the other side is like, no, we're going to cut like 300 basis points, right? Because we're going to hit that liquidity crisis. And so what that ends up doing is you start to average those out. That's where like this market expectation of 75 to 100 basis points for this year comes into play. But it's really just like this binary setup. It's either going to be just a couple or, a whole swath of cuts.
Yeah. Like I listened to the FOMC, and basically what Powell said is until there's extreme stress in the job market or otherwise, like legacy markets, et cetera, they're in no rush to cut. So if they're not in a rush to cut, why, like front running that seems very dangerous, because he's basically telling you there would have to be a crisis. And why would you want to front run a crisis to the long side?
Okay.
Because if things go bad, your downside is steep, right? Before they could actually step in and do something there.
One point that you both haven't raised, but I think is meaningful, is this is an election year. So I want to ask both of you and get a quick response here. What is the path of least resistance from a political perspective? JJ, I'll start with you. When you look at the actions of the Fed and the Treasury, knowing that it's an election year, knowing that there's going to be pressure from the existing administration or even a future administration, as you have this tete-a-tete between Biden and Trump, what do you think is the path that is easiest for them to take?
They want obviously the administration, whatnot, they need the number to go up. They need strong economic data, et cetera. And then they use those talking points for the election cycle. So there seems to be a tension there. I think in Powell's 60 Minutes interview on Sunday, he actually mentioned that, like, hey, we need to figure out some kind of responsible way. We have $35 trillion in debt or whatever it is, and it's not ending. So there seems to be some kind of tension building where the Fed's saying that they're taking away that excess liquidity that's kind of fueled markets, and the administration is trying to pump it higher. So it seems, I don't have a read there. I'm not really an expert on it, but it just seems like there's a tension building there. And ultimately, it's the Fed that makes those decisions. So until we hear it from Powell, I would be weary that it could get worse before it gets better.
If I could summarize that, it sounds like we're going to stay the course and ignore the political pressure. Ben, what about you? Again, same question. Path of least resistance for for the powers that be that are making these decisions in an election year?
I think it's just like a holiday dinner. You just ignore it, right? You don't talk about it, and unless you want to be, talked about later on, go ahead and start talking about it. But if you don't, then you kind of just keep your mouth closed. One of the things that I saw over the last couple weeks was really preparation for create additional demand on all of that debt. There was a paper that came out from the Fed titled "The Field Guide to Monetary Policy Implementation Issues in a New World with CBDC, Stablecoin, and Narrow Banks." Narrow banks is basically like Tether, right? So they actually go ahead and discuss that business model and how it starts to affect, deposits in banks, how it affects spending, velocity of money, as well as demand on treasuries. Right? This is them understanding that they need to stir up additional demand, and this has nothing to do with politics. And so, in my mind, I don't think a lot of their decisions are really taking into consideration, okay, I want Biden in, or I want Trump in the office, and so I'm going to start to do this with the rates and say these comments. Like, I don't really buy that. Like, I think their job is a little bit more long term in terms of focus, and they just want to create price stability in the market. And so part of that has to do with just ensuring that the debt gets bought in the market. Because if you don't have buyers, you got some serious issues on hand, right? That those trillions of dollars of debt, like I don't even want to think of the dangers there.
Yeah. So to summarize your point, it's really keep your head down, keep on doing what you're doing for the long term, and don't really worry about any of the political ramifications in the year. So I think more to come. We'll see what the actions start to as they play out over the next couple of quarters. It is a very interesting time to be alive when you look at debt levels and you realize that the amount of spending coming online, not just in the U.S., but predominantly if we look at the U.S. for the bills that were passed within the last 24 months, massive amounts of debt that are going to have to be issued and funded. So more to come there. We do have a question here from Ethan. Says, what do you guys think about Solana? I want to get your guys' take on that. That's the news of the day with the Solana going down and having to be brought back up by the engineers. I think this speaks a lot to the questions about its decentralization and its ability to compete against Ethereum. So I want to ask you guys about that. But before we do, for those who have joined just in the last few minutes, hit sharing this video with anybody you think that may enjoy a sophisticated take on the markets. We're here every Tuesday and Thursday. Happy to be here. Happy to be breaking down the markets. And if you're looking for a deeper way to support the show, there's always hitting that coin call ref link, going over to the website and being able to start trading. As I've said before, there's no better time to get prepared for the trades of the year than today. And you can't do that unless you're actually in the show and in the game. So hit that link, go start doing some trades, some small trades. That's just fine. Even some paper trades, start figuring out how you can play options. And of course, JJ's got some videos on that to really start thinking, not just the nuts and bolts of how do you actually place a trade, but how to think about a strategy. And that's what matters the most. So more to come there. In fact, we got a video coming out hopefully this week. All right, back to the question about Solana. Solana has the outage. It's breaking news this morning. I guess if I look at the price action on 24-hour, Solana's down, well, not that much, just 2.38%, sitting at 97.26. It seems the market isn't really repricing this outage. This has happened, I think, a couple of times, although I don't misquote me. JJ, what is the market actually looking at if you look at the price chart?
Looks pretty bearish to me, honestly, right now. It looks like it's kind of breaking down here. Look at the 50 RSI market's hovering right on that. So maybe it could bounce from here, but kind of this news seems to hit at bad timing here for Solana. It looks like it's kind of looking for a reason to sell, and I would expect if Bitcoin falls below 42.5 or so today, we'll really see some downside pressure coming to Solana, possibly fall down to the $78 to $70 range here in the near future.
Okay, so we could actually see a significant Solana pullback, which it really hasn't experienced just yet. What do you think the odds are that it goes all the way down to, I think this is the 200 on the bottom of the chart you were just sharing?
Yep. I think it'll probably hit here, bearing any unforeseen events in the macro, like a liquidity injection or things like that, I think this is probably your long-term target over the course of the next couple months. It's just a matter of how long it takes to get down to the 200-day. But it looks like it's kind of lost this uptrend momentum that it carried throughout the end of 2023. And it looks like it's ready for a technical reset here.
Okay. Ben, we did a show several months ago at this point on Solana. I think there was divergent thoughts on whether it was going to be a beta play. When you see this breakdown based on this event, right? Not just market repricing or consolidation and redistribution. This is perhaps based on an event like this, which is going to challenge the narrative that it's really decentralized. Do you look at this as a buy the dip moment? Do you look at this as just more caution that with the Solana story?
Caution. When it came to that Jupiter airdrop, that felt like the big event that everybody was waiting for on Solana, and all of the activity over the last 6 months has been building up to like airdrop season on Solana. And so now that's in the rearview mirror. What sort of activity are we waiting for? I see Solana trying to take advantage of its recent success by trying to go ahead and sell pre-orders of its second phone. Smart move. This is the time to do it because a lot of Solana holders are holding, good gains over the last 6 months. So take advantage of it. Go ahead, get those orders filled. We go ahead, we pull up its price chart. To JJ's point, it went ahead and it broke its trend. It retested it and said, nope, not happening. So we're going sideways. When we pull up our price strength model, same thing with Solana. Like it's not showing any additional strength. It's not regaining it. We're kind of entering this moderate period for Solana. I would like to see it start to regain some of that strength, which is going to take a little bit of time. Based on how this model gets determined. And then I think one of the more important ones, which we brought up a long time ago on a previous episode here when we talked about Solana, which was where is all of its Solana supply sitting? This kind of goes back to an older discussion on really you want to see tokens move from a lower form of usage or a highly liquid form of usage to a more illiquid or higher form of usage. Higher forms are like lending it out to be borrowed or actually going ahead and staking them up onto the network itself. And we're not seeing that those Solana tokens get locked up like we would want to if you want to see this continued kind of inelastic response on price. And so what that kind of means, like everybody with Bitcoin supply and the halving, and okay, so we're going to have this huge liquidity shock. That's what I'm referring to, right? You see all those tokens hit these very illiquid usages. Like that is what we mean with like a little bit of supply shock. And so that translates to price. We didn't see it. Jupiter's in the rearview mirror. Price strength is showing weakness. This is a hard time for Solana holders.
So I think another thing that's out of catalyst, like it had this huge, 6x run up in a matter of a few months. And now what happens? Like people take profit, and where's that additional liquidity coming from? Like what's the new narrative? What's going to push this higher? It's lost momentum. There's kind of now a bearish news cycle coming in. And it seems like it's kind of tilted towards the downside here and due for some mean reversion.
Well, I think for anybody who's looking at this as a FOMO, if perhaps you watched the 6x climb over the last several months and thinking you have to jump in, I suggest you go watch the video that we created on this channel asking if Solana was a beta play to Ethereum. It gives more detail into what Ben just shared. Obviously, he's giving some updated views here. And there may be some time, certainly, to be cautious and to really do some additional research if that's a position you're looking at building in. Okay,
and
so
just one more note to add, Marconi,
Ben, you're coming back.
Sorry,
coming
man.
back hot.
Yeah.
All right, what do you got? What do you got?
I'm realizing we never even hit on what we were talking about, which I think is really the whole point of the conversation here, is that Solana had an outage event. And to me, we're not even talking about it, right? Like we've seen this before. We're not even in a bull market. We're not even in the meat and potatoes of the bull market. Solana's having another outage. Like we're not even discussing it. Like, okay, why? What's the reasoning? It's just kind of like, yeah, that's happened before. Okay, nothing really changed.
Well,
like, keep that in mind here. Like everyone's saying, Solana is poised to be this huge breakout, but what's different now? What's different?
Mhm.
Everything, all the catalysts are in the rearview mirror. So I just wanted to address that, Marconi, that we're not even sitting here discussing these outages.
Well,
We're not
Ben,
even
let me push
doing that.
back. Let
Must
me
be a
push
Tuesday.
back on the
Solana's down.
Yeah, let's push back on the significance of the network being down. You have several, I would say, analysts and VCs in the market that have been pushing the idea that you don't need perfect decentralization. You can have modified decentralizations or decentralization. You can actually have a certain amount of centralization. The criticism of Solana has been the cost of being a validator, the expense of being able to support that network. We've seen this go down several times and it's bounced back. How important is decentralization to this market?
That's one of those trade-offs, right? That's the question. Not every use case needs great decentralization. Like Solana in what it's trying to pursue, I think it's a great use case. It should continue to do it. I understand there's a lot of, kind of capital barriers for being able to go ahead and run the required infrastructure and hardware to validate the chain, but it's for some reason something's not working the way it's supposed to. I'm not a computer scientist that dives into those things. I just understand that when it comes to setting up an application and you have certain priorities in mind that you want to go ahead and give the best user experience possible, you don't always seek out Ethereum. You don't always necessarily need to seek out Solana. They all have different use cases. And I'm very happy the way that Solana is trying to pursue what it's trying to pursue. Like I know I've recommended Solana for developers looking to build applications because it made a lot of sense for what they're trying to do. Others, L2s, make more sense. And frankly, some would just go on Ethereum L1, right? That is the Manhattan of crypto. I understand that the rent is going to be very expensive, but you're trying to attract those wealthy citizens and take advantage of it.
There you go. I'm very interested to see what price premium decentralization buys as we move forward into the next 5 years. I know it's a long time for a lot of the audience to think that far out, but there is a good question about where the applications need to sit. How decentralized do you need to be? And whether or not an L1 like Solana really starts to take a meaningful amount of the market because the use cases for the decentralization is lower. But guys, we're getting to the end of the show. I want to wrap us up with the trade, the DGen trade, as we've called it, looking at the trade on CoinCall, because I think if you listen to the show, I think the messaging today is unfortunately similar to other shows, which is it's time to sit on your hands, not to really enter into any new trades. But this is a trade that we started a couple of weeks ago. So walk us through, JJ, what it's looking like right now. Is it still in the black?
So what did we say last week? I think we were looking at February 8th, 44K calls. So these expire towards the end of this week. I don't believe they're doing so well. Let's see. Yeah, so they're only trading at like 183 now. So they've lost a bit of value. I would actually close those if you haven't already. I think we said if it loses the 50-day last week, that would be your spot to close out because invalidation was so close. So looking at it now, if you had to enter a position, how would you do it, right? So I'm looking at the options chain here on CoinCall, and I'm looking at the February 22nd. So let's take a look at these strikes. So as long as Bitcoin is above the 50-day moving average, which is currently 42.9 and change, so if it can break back above there, I think you might want to take a risk on some long calls here. So I think possibly these 45Ks, 730. I think there's a decent chance that we hit 46K if it can gain momentum, break above last week's highs around 43.5. I think that could come into play. And again, your invalidation so close, like basically a daily close below the 50-day moving average. You close these for a paper cut. And if Bitcoin starts to lose momentum, say it falls below 42.5 again, I think these 42K calls or 42K puts expiring in 2 weeks become attractive. The put premiums are currently much lower than the call premiums. So you're basically paying less to get exposure here on these. So I think anything in this 42 to 40K range on these puts here expiring February 22nd are good trades. And again, you're same way to the upside that your invalidation's close, your downside. If you buy these puts, you could basically close them out at 43.5 or so, and your losses wouldn't be too steep since they're out of the money already.
Okay, so these are smaller trades, just maybe a good chance to dip your toe in the water if you're looking to get more familiar with the interface with just trading options in general.
Paper trade them, like if you're not comfortable trading options yet, try it with the paper trade. Watch how the premiums change throughout the course of the day based on Bitcoin's price movements, and just get used to it. And then you'll kind of get a better feel for how to measure these things and determine what's underpriced, what's overpriced relative to the moves that Bitcoin can make over the course of the next 2 weeks. Like we're saying, that implied volatility level is so low that eventually it'll spike. Who knows if it'll be this month or next month or 2 months from now, but eventually it will. And if you're constantly monitoring these things, you'll be in position to act when you feel like it is due for a spike.
Yeah,
that's a great point. You just paper trade it, and as you see the pricing change, because you'll get a feel for applied volatility and kind of it's called time decay, right? You buy a contract and it starts to lose value as time passes. You'll see that change, and you'll get that feel in the market, and you'll see this regime literally shift right there on the pricing of all these contracts. So it's a good practice.
Yeah, you can see it now. Like it's changing pretty rapidly. Price just jumps around based on very small moves in Bitcoin. So these things are ultra levered. Basically, you're buying exposure to a full Bitcoin for right here. You're basically short Bitcoin at 42,000 in 2 weeks for $900 as opposed to 42,000. So the leverage on these is massive. That's over. It's like 42x leverage essentially. But your risk is minimized. Like you can't lose more than you're buying on these. So your maximum loss would be this expires worthless. Your maximum gain would be if Bitcoin crashes to 20,000, you're up, $21,000. So it's a good risk reward if you can learn to manage the volatility inherent to these products.
And if you have questions, as I will say again, as I said many times, JJ's got several videos already on the channel. He's continued to add to the library. This is a good time to be checking those out, getting prepared. We know these fat swings are going to happen perhaps before the halving if we get a liquidity event, which we've talked about a couple of videos ago, a couple of sessions ago. Also, at the end of the year, we talked even just last episode about playing Ethereum and looking at the fat pitch there. You can't do those if you don't know what you're doing, and you don't want to just jump into options. They're a little bit more complex. But again, as JJ just mentioned, they provide a tremendous amount of optionality, no pun intended, and the leverage is insane, but also risk management. And that's what we want to bring to the show. All right, that's going to do us for today. As we're looking at the market as we close, it continues to be flat. Bitcoin continues to trade at about 42,000. Ethereum at 2,000. We're basically flat. We're probably going to be that way for the reasons we've talked about on the show. And that's just the way it's going to be. But it's never boring as long as you're here to hear it our way. For Ben, Lily, and JJ, this is Marconi White saying thanks for joining. We appreciate you coming out to the live show. We're here every Tuesday and Thursday, so be sure to check us out and join us later this week. Ciao.